We've got a really fascinating collection of perspectives on the current and future state of crypto.
Yeah, should be interesting.
We'll be exploring how experts see the relationship between crypto and traditional finance, the influence of politics on the market,
Okay.
and where some of the biggest players in the financial world see things heading.
Right.
One expert who has some interesting thoughts is Mark Palmer from Benchmark Capital. He's notable for being one of the first analysts to cover cryptocurrency.
Interesting. So what does he have to say?
Well, Palmer believes that a crypto-friendly political environment is a major factor behind the recent surge in the crypto market.
Makes sense.
He specifically points to the support of President Trump and Vice President Pence as evidence of this positive shift in the political landscape. He also highlights key cabinet appointments that signal a more favorable stance toward the crypto industry. This represents a significant change from the previous administration's approach.
So what about the regulatory side of things? How does he see the SEC's role in all of this?
Palmer argues that the SEC, under the leadership of Gary Gensler, actually stifled the growth of the crypto market.
Really?
He uses the term regulation by enforcement to describe the SEC's approach, which involved targeting crypto companies without establishing clear regulatory guidelines. This created a lot of uncertainty for institutional investors who were hesitant to invest due to the fear of potential project shutdowns.
So a climate of fear rather than clarity.
Exactly. And now Palmer is hopeful that the SEC will adopt a less aggressive approach under the new administration, allowing the industry to grow and mature. He advocates for a hands-off approach from the government, where the focus is on removing obstacles to growth rather than imposing strict regulations.
So less stick, more carrot.
Pretty much.
Interesting. What else?
Well, Palmer believes that the government should appoint a crypto czar to oversee all crypto-related initiatives across the executive branch. He thinks that this would help to create a more unified and proactive stance on cryptocurrency within the government.
Okay. And what does he think they should focus on?
He has put forward some bold proposals. He suggests the establishment of a Bitcoin reserve similar to the gold reserves at Fort Knox. He also proposes reducing capital gains taxes on crypto investments to zero. These proposals clearly demonstrate a strong belief in the potential of Bitcoin.
Definitely some big ideas there.
Palmer is a big believer in Bitcoin's inherent scarcity as a key advantage over traditional currencies. He explains that this scarcity is built into the system through a process called Bitcoin halving.
And what is that exactly?
Bitcoin halving occurs every 4 years and reduces the rewards given to Bitcoin miners by half. This mechanism is designed to control inflation by limiting the supply of Bitcoin.
Interesting.
The total supply of Bitcoin is capped at 21 million tokens, with the last one to be mined in the year 2140. This stands in stark contrast to the Federal Reserve's ability to print money, which can lead to inflation and a decrease in purchasing power. This limited supply is a major draw for investors seeking a hedge against traditional currency devaluation.
Right. So in Palmer's view, the more institutions and investors embrace Bitcoin, the more valuable it will become.
Exactly. Palmer points to the increasing number of institutional investors entering the crypto market as a sign of its growing legitimacy and potential. Big players like BlackRock and pension funds are now investing in Bitcoin.
Yeah, we've been seeing that trend. It's pretty significant.
He attributes this shift in part to the SEC's approval of spot Bitcoin ETFs. These ETFs make it easier for institutional investors to gain exposure to Bitcoin. This development is reminiscent of the rise of gold ETFs in the early 2000s.
I see.
Palmer believes that this trend will fuel a surge in demand for Bitcoin, potentially leading to a significant price increase.
So what kind of numbers are we talking about here?
Based on historical price patterns and the accelerating pace of institutional adoption, Palmer predicts that Bitcoin could reach $225,000 by the end of 2026. While this prediction is certainly optimistic, it reflects the growing belief in Bitcoin's future among some prominent figures in the financial world.
Wow. Okay, so quite bullish on Bitcoin then.
Very much so. However, Palmer also acknowledges the risks associated with Bitcoin investment, particularly for retail investors. He cautions that Bitcoin is a highly volatile asset and its price can fluctuate dramatically.
Yeah, it's definitely not for the faint of heart.
He emphasizes that Bitcoin remains a risk asset that is susceptible to market fluctuations and stress. This was evident during the COVID-19 pandemic when the price of Bitcoin experienced a significant drop.
Right. So even with all the potential upside, investors need to be aware of the inherent risks involved.
Absolutely.
They've partnered with NVIDIA for their AI platform.
Oh, wow. So they're really serious about this.
It seems that way. They even have a superpod.
What, a superpod?
Yeah, it's like their supercomputer to run everything.
So it's not just about buying the hardware. They've actually developed their own AI platform too.
Right. But their smart about it. They can integrate it with different external AI platforms, like for large language models.
That's pretty flexible, isn't it?
It is. It means they can use tools from all sorts of providers, OpenAI, Google AI, whoever's best.
They aren't putting all their eggs in one basket. But what about data security? That has to be a concern in finance.
Absolutely. And they seem to get that. They prioritize keeping customer data under their control.
That's good to hear, especially with all the regulations they have to deal with.
It's crucial for customer trust, too, of course.
So Vince believes that AI won't replace human employees.
Yeah, more like enhance their capabilities.
And hopefully improve their quality of life at the same time.
That's the idea. Take care of the tedious stuff. Let people focus on what's interesting.
More creativity, strategy.
Exactly. He sees a future where AI agents and assistants are just part of how the industry works,
Making things more efficient.
leading to new solutions.
And a better experience for everyone involved.
It's a big technological shift. It will change how everything works in finance.
Vince says it's already happening. AI is making life better for some BNY Mellon employees.
Streamlining tasks.
Helping with processes.
It all adds up to less work, less stress. Maybe people enjoy their jobs more.
And of course, it can lead to new solutions for their clients too.
Things that just weren't possible before.
AI isn't just automating the old stuff, it's opening up new possibilities.
One area where it's really shining is fraud detection.
It makes sense. You need to be able to spot patterns that humans might miss.
Right, those old rule-based systems were easy to get around.
But AI algorithms can analyze huge data sets and pick up on things that just wouldn't be visible otherwise.
Subtle stuff, anomalies.
And they learn as they go, getting better at detecting new scams.
It's essential in finance. You need to be one step ahead.
Risk management is another big one.
It always was a headache. So much to calculate.
And relying on human judgment, which isn't always reliable.
Right, but AI can look at all kinds of data.
Market trends, the economy, even customer behavior.
It can spot potential problems much more accurately.
So financial institutions can make better decisions
Optimize how they handle risk.
and protect themselves from those big disasters.
It's about making the whole system more stable.
AI is even changing how companies interact with their customers.
Think chatbots, virtual assistants,
It's revolutionizing customer service in finance,
24/7 support.
answering questions, resolving issues, even offering guidance.
It frees up human agents to deal with the really tricky stuff.
So customers get better service.
And companies build stronger relationships with their clients.
But it goes beyond basic customer service, right?
There's personalized financial advice.
That used to mean hiring an expensive advisor.
Not everyone could afford that.
But AI is changing the game. It can give advice tailored to your specific situation.
Looks at your finances, your goals, how much risk you're comfortable with,
Then it recommends what you should do.
investments, that kind of thing. It can even handle things like rebalancing your portfolio.
It's giving people more control over their money.
And the tools to make smart decisions about their future.
Algorithmic trading is another area that's being transformed.
That's using computer programs to make trades based on preset rules.
It can react to the market much faster than a human,
AI algorithms can analyze huge amounts of data
identify opportunities,
and execute trades at incredible speed.
it can make the market more efficient in theory.
Lower transaction costs, better price discovery,
But of course, there are concerns.
market manipulations.
Systemic risk.
Regulators are keeping a close eye on it, trying to mitigate those risks.
Make sure everything stays fair and orderly.
It's important to remember that we're still in the early days of AI in finance.
It's going to keep evolving, that's for sure.
We'll see even more innovative applications.
The potential is huge
It could make the financial system more efficient, more transparent.
and ultimately more accessible for everyone.
But there are challenges too.
Job displacement is a big one.
AI taking over tasks that humans used to do.
People are worried about losing their jobs.
Companies need to be proactive,
Provide training, help people adapt.
give them the skills they need for the future.
Bias in algorithms is another concern.
If the data you train the AI on is biased, the decisions it makes will be biased too.
Like loan approvals.
If the data reflects past discrimination, the AI might unintentionally discriminate too.
Companies have to be very careful about this,
Make sure the data is diverse, representative.
and that decisions are being made fairly.
Transparency is key.
And then there's the issue of customer data.
AI relies on huge amounts of data.
So privacy and security are paramount.
Companies have to prioritize protecting that data
Follow the regulations.
and be upfront with customers about how their information is being used.
Regulators have a vital role to play too.
Setting clear guidelines.
Standards for how AI can be used in finance.
We need robust frameworks in place
To make sure AI is being used safely, securely.
and that it benefits everyone.
So AI AI in finance presents both opportunities and challenges.
If we're responsible, thoughtful, we can harness its power.
To create a better financial system for everyone. It's really fascinating to see all these different perspectives come together. You've got Mark Palmer, Alex Chris, Robin Vincic. They're all looking at this changing world of finance.
It really is a changing world, isn't it? You've got cryptocurrencies shaking things up.
Definitely. They've really challenged how we think about currency, value, the whole financial system.
And it's interesting to see how traditional institutions are reacting. They've gone from being skeptical to, well, maybe not embracing crypto, but at least trying to understand it.
Figuring out where it fits in. People like Mark Palmer, those early advocates, they've helped bridge that gap, haven't they?
Absolutely. They explained what Bitcoin is all about, why it matters, highlighted those concerns about inflation, the power of central banks.
Palmer's take on Bitcoin halving, the fact that big institutions are getting on board, it makes you think about the long-term value.
It does. Of course, he's not ignoring the volatility. Bitcoin is a risky investment, no doubt about it. But he's convinced that the scarcity, the growing acceptance, it's all pointing towards a price surge.
Then you've got Alex Chris at PayPal. He gives us a peek into how the big payment platforms are thinking about crypto.
It's not about replacing the old system. It's about making it better. Faster transactions, lower costs, making finance more accessible.
That's the key, isn't it? Making it work for everyone. And integrating crypto into their existing infrastructure. That seems like a smart approach.
Pragmatic. Make it work with what you've already got. It could revolutionize cross-border payments.
Imagine that. No more hassle, no more exorbitant fees. And then there's Robin Vince at BNY Mellon. If anyone knows about traditional finance, it's them.
Centuries of experience. And he's acknowledging that digital assets are here to stay.
That's a big deal, isn't it? He sees them as part of this ongoing evolution, working alongside traditional currencies.
It's not one or the other. It's about finding ways for them to coexist, to evolve together. And BNY Mellon, they're not just talking, they're actively involved in modernizing financial infrastructure.
Like with Fed now, they're adapting to the changing landscape. But Vince is also excited about AI, its transformative power.
He sees it as a tool to enhance what humans can do, not replace them. Working together, humans and machines.
That's a powerful idea. It could lead to incredible efficiencies, new solutions we can't even imagine yet. And it's already happening. AI and fraud detection, risk management, personalized advice, algorithmic trading, customer service.
It's touching every aspect of finance. And this is just the beginning. Think about what the future holds. It's amazing.
So we're seeing a financial landscape that's constantly in flux. Crypto, traditional finance, or AI, they're all converging, pushing institutions to adapt, to innovate.
To rethink everything. It's exciting, but it's also challenging. There are risks involved.
We have to be mindful of those risks, approach them thoughtfully. But if we do it right, the potential is enormous. A more efficient, accessible, equitable financial system for everyone. Goodbye and see you in the next video.